Welcome to the Roy Morgan Weekly Update. The Albanese government's first big event kicks off this week with the Jobs and Skills Summit, starting on Thursday. As we discussed last week, there are many considerations for the summit in terms of finding the right people for the right jobs. But first, let's have a look at the key weekly indicators. A look at the key indicators shows support for the ALP softened over the past week. Despite continued discussion about former Prime Minister Scott Morrison's multiple ministries, ALP support is down 1 percentage point to 52% on a two-party preferred basis, ahead of the coalition on 48%. Other metrics have also moved in the wrong direction for the government. The Roy Morgan Government Confidence Rating, whether people think the country is going in the right direction or the wrong direction, is down slightly by 2.5 points to 103.5. Fortunately, 43% of Australians say the country's going in the right direction, compared to 39.5% who say the country's going in the wrong direction, a gap of 3.5 percentage points in a positive direction. So more people are positive than negative. Consumer confidence is also down slightly by 0.6 points to 85. And as you can see, consumer confidence remains well below that neutral level of 100, where equal numbers of people are optimistic and pessimistic. The movement in the underlying primary voting intention has also favoured the coalition over the last week. Support for the Liberal National Coalition is up 1 percentage point to 39.5%, while support for the ALP has dropped 1.5 percentage points to 36%. Support for the minor parties has also favoured the right-leaning parties. Support is down 1 percentage point to 10.5% for the Greens, but up 1.5 percentage points to 4% for One Nation. Support for independents is down 1 percentage point to 6% and up 1% to 4% for other parties. In better news for the government, Australians are becoming less worried about an inflationary breakout. Every week, Roy Morgan asks Australians what they expect inflation will be annually over the next 2 years. And the latest data shows Australians expect inflation of 5.3%. That's down 0.2 points on last week. And this is the lowest reading on this measure for over 3 months, since late May. The measure's now down 0.7 percentage points since late July and has dropped consistently in recent weeks. The lowered price of petrol, down over 40 cents per litre since mid-July, as well as the reduction in prices of key groceries like lettuce, is playing a part. And as well as inflation expectations falling, there's also some positive news in regards to businesses and how they feel about the economy. Roy Morgan business confidence increased 1.1 points to 96 in August. This is a small increase, but it's the first increase in the index since April, before the Reserve Bank began to increase interest rates. And the fact that businesses grew more confident in August, despite the series of increases in interest rates and the highest inflation in over 20 years, does provide comfort that businesses can deal with the expected increases to interest rates yet to come, including another possible increase of up to 0.5% next week. But remember, that number still means that we have businesses that are less confident than that magical 100. If we now look at business confidence by industry, not all industries are the same. The most confident industries in August, perhaps no surprise, are education and training at 123.6, way above that magical 100. That's the most confident after the international border restrictions were relaxed, allowing the return of more international students. The second most confident is accommodation and food services at 113.2. This industry has benefited from the relaxation of internal border restrictions, which has allowed Australians to take holidays in record numbers around the country. And in third place is mining at 112.9. And Australia has recorded a series of record trade surpluses so far this year as exports of coal, gas and iron ore have hit record levels. At the other end of the scale, there are some industries that have confidence well below the average. These include retail on 73.2, way below neutral, as retailers brace for a tough fourth quarter. Electricity, gas and water on 71.5, and finance and insurance on only 68.8. Clearly these industries are heavily impacted by rising interest rates, as well as the higher energy prices due to supply shortages and the Russian invasion of the Ukraine. As we mentioned last week, whether you're someone who's looking for a job or someone looking for employees, this week's Jobs and Skills Summit will be of keen interest. The Jobs and Skills Summit is bringing together politicians, unions and business leaders from across Parliament and all parts of the community to look at what can be done for businesses as well as people who are unemployed or underemployed. Many in the business community are calling for increased immigration. However, an analysis of the data on Australia's labour markets shows that there are over 2.5 million Australians who are looking for work or looking for more work right now. The latest Roy Morgan monthly unemployment figures for July show 2.52 million Australians are unemployed or underemployed, equivalent to 17.1% of the workforce. And the annual ABS Potential Workers Survey shows even more, 2.7 million looking for a job or more hours as recently as February in 2022. These two surveys show that without commenting on whether or not we should have more immigration, these extra potential workers should not be forgotten in the deliberations at the summit. What's needed is to match them with the jobs, retraining, relocation, community support, whatever it takes. There's more detail and analysis of these issues on the Roy Morgan website, and I encourage you to go and drop in to roymorgan.com and have a look. The importance of the deliberations at the Jobs Summit cannot be overestimated. Newly released data from Taking the Pulse of the Nation, a Melbourne Institute and Roy Morgan partnership, reveals respondents who are single and not employed, or in a partnership where both partners are not employed, continue to exhibit high rates of combined financial and mental distress. These rates increased at the end of 2021 and at the beginning of 2022. People who are employed or have a partner who's employed exhibit lower rates of stress. So let's hope we get it right at the summit. There's a lot riding on it. And that's a wrap. Subscribe to our Roy Morgan YouTube channel for all the latest political, economic and market research data and insights. Thank you for listening. I look forward to joining you again next week when we'll have the latest data on consumer confidence, inflation expectations, unemployment and voting intentions. Take care. See you next week.